You've got $2,000 and want to make it work for you. What's the smartest move? Today I'll break down 4 stocks with game-changing potential. These aren't random picks, these are companies fundamentally transforming their industries. We'll cover a Latin American e-commerce powerhouse, a digital payments innovator, a cloud computing giant, and a leader in data storage. Each has a unique edge and a compelling reason to earn a spot in your portfolio. If you want actionable ideas, and the why behind each investment, stick around. Smash that like button, it helps the channel more than you know. Subscribe and hit the bell icon so you never miss our deep dives into building wealth. Ready to see which stocks could change your financial future? Let's get started. First up is MercadoLibre, ticker MELI, the Amazon, PayPal, and Shopify of Latin America, all rolled into one powerhouse. If you're looking for a company that's not just riding the wave of digital transformation, but actually creating it across an entire continent, MercadoLibre is the name you need to know. Founded in 1999, this Argentinian-born tech giant has become the undisputed leader in e-commerce and digital payments throughout Latin America, a region that's home to over 650 million people and bursting with untapped potential. MercadoLibre dominates both e-commerce and fintech, driving digital adoption in a region where much of the population is just beginning to come online. Imagine a place where millions are skipping traditional retail and banking altogether, jumping straight into the digital age. That's the story unfolding in Latin America, and MercadoLibre is at the center of it all, making online shopping and digital payments accessible to everyone, from bustling cities to remote villages. Their marketplace connects millions of buyers and sellers, creating a vibrant digital bazaar that's open 24/7. But it's not just about listing products. MercadoLibre has built a logistics powerhouse with MercadoLibre, their proprietary shipping network. In a region notorious for logistical headaches, think poor infrastructure, long distances, and customs delays, MercadoLibre is a game-changer. They've invested heavily in warehouses, last-mile delivery, and technology to ensure packages get where they need to go, fast and reliably. But the real magic happens with Mercado Pago, their fintech arm. What started as a simple payment solution has evolved into a full-blown financial ecosystem. In a region where nearly half the population is unbanked, Mercado Pago is providing access to digital wallets, credit, insurance, and even investment products. It's empowering small businesses, freelancers, and everyday consumers to participate in the digital economy, many for the very first time. The synergy between their marketplace and payments platform creates a powerful flywheel effect. Every time someone shops on MercadoLibre and pays with Mercado Pago, the ecosystem gets stronger. More users attract more merchants drive more transactions, and more transactions generate valuable data and cross-selling opportunities. This virtuous cycle locks users in and fuels exponential growth, making it harder for competitors to catch up. MercadoLibre's revenue growth has been nothing short of spectacular, consistently posting double-digit gains year after year. And they're not resting on their laurels. The company keeps rolling out new services, like asset management, insurance, and credit, making their ecosystem even stickier and more indispensable for users. Their relentless innovation means they're always one step ahead, adapting to the needs of a rapidly changing market. The market opportunity here is absolutely massive. E-commerce and digital payments are still in their infancy in Latin America, with penetration rates far below those in the US, Europe, or even Asia. As internet access expands and smartphones become more affordable, millions of new consumers are coming online every year. This is a once-in-a-generation shift, and MercadoLibre is perfectly positioned to capture the lion's share of this growth. Now let's talk about leadership. MercadoLibre is helmed by founder and CEO Marcos Galperin, a visionary who steered the company through economic crises, fierce competition, and rapid technological change. Under his guidance, MercadoLibre has become not just a market leader, but a true innovator. Yes, the stock isn't cheap, but you're paying for dominance, innovation, and a founder CEO with a proven track record of navigating the region's unique challenges. Of course, there are risks. Latin America is known for its economic volatility. Currency swings, inflation, and political instability are real concerns. There's also competition from global giants like Amazon and local upstarts. But here's the thing. MercadoLibre's deep local expertise, massive logistics network, and powerful network effects make it incredibly tough to dislodge. They've weathered storms before and come out stronger every time. The company carries a market cap of about $102.2 billion, with a price-to-earnings ratio near 48.79 and earnings per share of $40.92. In 2024, MercadoLibre generated $20.77 billion in revenue and produced net income of $1.91 billion, showing a business that is scaling while still delivering meaningful profitability. For long-term investors, MELI represents a rare opportunity to own the backbone of Latin America's digital economy. This isn't just a company, it's the infrastructure powering commerce, payments, and financial inclusion for hundreds of millions of people. As the region continues to digitize, MercadoLibre's role will only become more central and more valuable. If you want exposure to a continent's digital transformation, MELI is a cornerstone holding. It's a bet on the future of Latin America, a future that's increasingly digital, connected, and full of opportunity. With its unmatched scale, relentless innovation, and mission-driven leadership, MercadoLibre is set to shape the next decade of growth in the region. That's why MercadoLibre is my first pick for investors looking to ride the digital revolution in emerging markets. If you want to own a piece of Latin America's future, MELI is where you start. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Next, let's talk about Circle Internet Group, ticker CRCL. Circle is a company at the very heart of the digital money revolution, and its upcoming IPO is one of the most anticipated in the fintech world. If you're looking for a pure play on the future of money, one that's deeply embedded in the infrastructure of digital finance, Circle is a name you need to know. The company's mission is to make money truly borderless, frictionless, and programmable, and it's already making huge strides toward that goal. At the core of Circle's business is USDC, a regulated stablecoin that's pegged 1-to-1 to the US dollar. USDC is designed to make digital payments not just fast and cheap, but also accessible to anyone, anywhere in the world. Whether you're sending money to a friend across the globe or settling a business transaction in seconds, USDC is making it possible. It's already one of the most widely used stablecoins, trusted by millions for its reliability and transparency. In a world where digital dollars are becoming as important as physical ones, USDC is leading the charge. What sets USDC apart is its commitment to transparency and security. For every USDC token in circulation, Circle holds a real US dollar or an equivalent high-quality reserve asset in a secure account. These reserves are regularly audited by top-tier financial firms, and Circle publishes detailed reports so anyone can verify the backing. This approach not only builds trust with users, but also allows Circle to earn interest on its reserves, creating a steady revenue stream. In an industry where trust is everything, Circle's transparency is a major competitive advantage. As more and more economic activity shifts onto blockchains, the demand for trusted digital dollars like USDC is set to explode. We're seeing a rapid transformation in how value moves around the world, with everything from remittances to payroll to global trade starting to leverage blockchain rails. USDC is already integrated into hundreds of apps, exchanges, and payment platforms, making it a foundational layer for the next generation of financial services. The more the world embraces blockchain, the more essential Circle's role becomes. One of Circle's biggest strengths is its proactive approach to regulation and compliance. In a space where many companies have stumbled, Circle has worked closely with regulators from day one, building a reputation as a trustworthy and responsible player. This focus on compliance has made Circle the go-to partner for major institutions, fintechs, and developers who need a stable, regulated digital dollar. It's not just about following the rules, it's about setting the standard for the entire industry. The financial world is taking Circle very seriously. The company has forged high-profile partnerships with giants like Visa, MasterCard, and BlackRock. These aren't just marketing deals, they're deep integrations that bring USDC into the heart of global payments and asset management. When the biggest names in finance are betting on your technology, it's a powerful signal that you're building something with staying power. Circle's business model is elegantly simple and highly scalable. Every time a new USDC is issued, Circle's ecosystem grows, and so does its revenue potential. But Circle isn't stopping at stablecoins. The company is building a suite of developer tools and APIs that make it easy for businesses to integrate digital dollars into their products. From programmable payments to on-chain finance, Circle is laying the groundwork for a future where money moves at the speed of the internet. Of course, there are risks. The regulatory landscape for digital assets is still evolving, and new rules could impact how Circle operates. Competition is also fierce, with other stablecoins and fintech startups vying for market share. But USDC's network effect is powerful. Once businesses and users are plugged into the USDC ecosystem, switching costs are high. Circle's early lead and strong reputation give it a real edge in this race. When Circle finally goes public, it will be one of the purest ways to invest in the infrastructure of digital finance. The IPO is expected to draw huge attention from both Wall Street and the crypto community, and it's likely to be a volatile ride. For investors who believe in the long-term growth of digital money, CRCL offers a high-risk, high-reward opportunity to get in on the ground floor of a financial revolution. The company is valued at roughly $19.63 billion, with earnings per share of -$0.86. In 2024, CRCL brought in $1.67 billion in revenue and reported net income of $18.1 million. A reminder that even with strong top-line activity, profitability can look very different depending on the cycle, costs, and the competitive landscape. If you're looking for a speculative bet on the future of money, CRCL should be on your radar. The company's growth will be closely tied to the adoption of digital dollars and blockchain-based finance. While there will be ups and downs, the potential upside is enormous if CRCL cements its position as the backbone of global payments. Even a small allocation to CRCL could pay off in a big way if the company succeeds in its mission. As more businesses, governments, and individuals adopt USDC, CRCL's influence and revenue could grow exponentially. For forward-thinking investors, this is a chance to participate in the next wave of financial innovation. That's why CRCL is my second pick for investors who want exposure to the future of finance. It's a company with vision, strong execution, and the potential to reshape how money works on a global scale. Now let's move on to our next stock and see what other opportunities the future of finance holds. Third is Amazon, ticker AMZN, a household name but still misunderstood. Most see Amazon as just e-commerce, but the real engine is AWS, its cloud computing powerhouse. AWS powers much of the internet with high margins and rapid growth, funding Amazon's relentless innovation. Amazon's advertising business is booming, now the third largest digital ad platform, and their push into healthcare, groceries, and streaming opens new trillion-dollar markets. The company's massive investments in logistics and fulfillment are paying off, driving efficiency and future profits. As AI adoption accelerates, AWS is positioned to supply the computing power behind the next tech revolution. Amazon is like a diversified tech ETF e-commerce. Cloud, ads, and call options on future industries. The stock's valuation is reasonable given its growth engines and deep moats. Amazon remains the giant of modern commerce and cloud, and the numbers underline just how massive this platform has become. The company sits at a market cap of approximately $3.39 trillion, trades at a price-to-earnings ratio around 31.69, and posts earnings per share of $7.08. In 2024, Amazon delivered $637.95 billion in revenue and generated net income of $59.24 billion, reinforcing why investors keep treating it as both a consumer powerhouse and an infrastructure backbone for the digital economy. For a long-term investor, Amazon is a smart, relatively safe bet on multiple megatrends. With visionary leadership and a culture of innovation, AMZN remains a core holding. Don't underestimate Amazon's future, its best days are still ahead. That's why AMZN is my third pick. Let's look at our final stock. Last up is Pure Storage, ticker PSTG, a true disruptor at the heart of the data revolution. In a world where information is the new oil, Pure Storage is the company building the pipelines and refineries that keep the digital economy running. Founded in 2009, Pure Storage set out to challenge the status quo of data storage, and today, it's become synonymous with speed, reliability, and innovation in enterprise storage solutions. Pure Storage replaced slow, legacy hard drives with all-flash storage, making data not just faster, but dramatically more reliable and energy efficient. Traditional spinning disks were prone to failure and consumed massive amounts of power, but Pure's flash-based arrays deliver lightning-fast access to data, while slashing energy costs and reducing a company's carbon footprint. This shift isn't just about performance, it's about sustainability and future-proofing IT infrastructure. Their evergreen subscription model is a game-changer, turning storage into a predictable, hassle-free service. Instead of the old cycle of buying new hardware every few years, customers get continuous upgrades and support, ensuring their systems are always up to date. This model is exactly what modern businesses want: flexibility, cost, certainty, and the ability to scale as their data needs grow. It's a win-win for both customers and Pure, locking in long-term relationships and recurring revenue. The explosion of data from AI, cloud computing, and the Internet of Things means demand for high-performance storage is only accelerating. Every second, businesses generate mountains of data that need to be stored, accessed, and analyzed in real time. Whether it's training AI models, running cloud-native applications, or managing billions of IoT sensors, Pure's technology is built to handle the scale and speed of the modern digital world. Pure's solutions are tailor-made for AI workloads, removing bottlenecks and enabling rapid innovation. Their storage arrays are optimized for the massive throughput and low latency that AI and machine learning demand, helping organizations unlock insights faster and stay ahead of the competition. In industries from healthcare to finance to autonomous vehicles, Pure is powering the next wave of breakthroughs. Their customer loyalty is off the charts, reflected in industry-leading net promoter scores and glowing testimonials from some of the world's biggest brands. Pure consistently takes market share from legacy giants like Dell and NetApp, proving that their approach resonates with customers who demand the best. The company's relentless focus on customer experience and innovation has built a fiercely loyal user base. Financially, Pure is scaling fast, with strong double-digit revenue growth and a successful shift to recurring revenue streams. Their subscription-based model provides stability and visibility, making them less vulnerable to economic cycles. Investors have taken notice, with the stock outperforming many peers in the tech sector. Pure's disciplined execution and expanding margins point to a bright future. The total addressable market for data storage is enormous, estimated in the hundreds of billions of dollars, and Pure's current share is still relatively small. That means there's plenty of room to run as more organizations modernize their infrastructure and move to all-flash solutions. The runway for growth is long, and Pure is well positioned to capture a bigger slice of this expanding pie. Of course, there are risks. Competition is fierce, with big players like Amazon, Microsoft, and Google always a looming threat. But Pure's simplicity, hybrid cloud focus, and relentless innovation give it a real edge. Their ability to integrate seamlessly with public and private clouds while delivering best-in-class performance sets them apart in a crowded field. Pure Storage has a market cap of about $23.43 billion, but it trades at a much richer earnings multiple, with a price-to-earnings ratio around 186.79, despite earnings per share of just 38 cents. In 2024, Pure Storage produced $2.83 billion in revenue and reported net income of $61.31 million, suggesting a business that is profitable but still valued by the market as a longer-duration growth story rather than a mature cash machine. For investors betting on the unstoppable growth of data and AI, PSTG stands out as a best-in-class pick. You're not just buying a storage company, you're investing in a key enabler of the digital world's future, a company that's helping to shape how information is stored, accessed, and used for decades to come. As the world becomes more connected and data-driven, Pure Storage is poised to play an even bigger role in powering the next generation of technology. From AI breakthroughs to cloud transformation, Pure is at the center of it all. That's why Pure Storage rounds out my list of top picks for the digital age. Now let's wrap up. There you have it. MercadoLibre, Circle, Amazon, and Pure Storage, each a unique play on the future. We've covered the digital backbone of Latin America, the infrastructure for digital money, the titan of cloud and commerce, and the data storage innovator powering AI. These stocks ride powerful trends shaping our world. Remember, wealth building is a marathon focus on quality businesses and hold for the long term. Do your research, know what you own, and think like a business owner. These are starting points for your own journey. Now, which of these four do you think has the most long-term potential? MELI's regional dominance, Circle's protocol play, Amazon's scale, or Pure's disruptive tech? Drop your thoughts in the comments. Want exclusive stock tips, deep analysis, and real-time alerts? Join the Stocks Galore Patreon, link in the description. Become part of our community of smart investors. Like, comment, and subscribe so you never miss an update. Thanks for watching, and I'll see you in the next one.